Hello, my friends. Katie Day with the Move Me to Texas team here with another episode of the Move Me to Texas podcast. Joined today with Paige Bowman, the Mortgage
Hello.
Collective, Movement Mortgage. What's going on?
What's up, Katie? How are you? That
I am
was
well.
weird. I just didn't say your full name.
I felt uncomfortable. I felt a little uncomfortable. Paige Bowman, Mortgage Collective, Movement Mortgage. Very long title we've got for you.
It is. It's a long title. Peebo, H-Town Mortgage Chick, coming at you live from 281.
281 or 713?
281.
713 is the OG, though.
I know. I'm like, not OG enough to be OG. I'm like, kind of. I'm not 346 at least.
What we're referring to are the area codes in Houston. Do you remember, and this may date me, do you remember or no?
Sorry, say that again. You broke up.
That you could call people without the area code?
I do remember that.
Okay.
It was a glorious time.
Sometimes I say things, and as you know, my real estate team ranges in age between, mid-20s to double that. Sometimes I say things that date me, make me look old.
No, I definitely remember that. I remember the good old phones used to just walk around the house and talk to people on.
Yeah.
Used to be able to call my grandparents without dialing the area code.
Yeah.
Back in the good old days.
Back in my day. So what are you seeing? What's new? How's life?
Life is great. It has been crazy this week. We've been busy. Lots of executed contracts.
Good.
Just got back from a little 3-week globe trotting tour. Canada, Seattle, Las Vegas.
I thought that you were going to say that you felt as if your Las Vegas trip was 3 weeks, even though it was only like 3 days. That's why when you said that,
it felt like it.
You saw my face when you said 3 weeks. I was like, what is she talking about? She's full of it.
Las Vegas for 3 days feels like 3 weeks. Just
yeah.
So you know.
It's in Houston, it's mosquito season. I'm starting to get mosquito bites.
Oh no.
And they're itchy. I don't like
travesty.
That. So yeah, real estate's busy. I feel like we're in this weird time though. What's going on with rates?
I'm actually it's a great question. I answer that question probably 100 times a day. I mean, right now the bond market is inflation numbers just came out, right? I think we're at like 7.8 or 8%, something like that. I don't know. They all kind of run in my head, but which is actually really good for the bond market. So rates were actually better today than they were yesterday, but we are still continuing to see this cycle of increase, and we are definitely over 5%. So we're there.
So just to go back to your original statement, just to add in some additional color and numbers on that for those that may be wondering, consumer price index rose 8.5%. Inflation
7.9.
Yeah.
February's reading, 81. Yes, 81. CPI was 8.9%. So I will be very interested to see what happens in the coming days, weeks, months, years. The Feds are meeting March, May, the second week of May. And we know that they're going to be increasing rates by 50 basis points. And for those who don't know what that correlates to, it's 0.25% in interest rates, typically standard. So it'll be interesting to just see kind of what that rising rate market does. But if you ask all of our parents that bought homes when their rates were double digits, they're like, what are you complaining about?
Well, that's what I was looking at. So Keeping Current Matters puts out like economic data for the real estate world or whatever. Yeah. So I was like looking at one of their slides, and basically this was their, mortgage rates, basically going from beginning of this year through now, right? And we're sitting at like 3.11% then, and then when they published this last month, it was 4.67. So obviously we've seen a pretty steady increase there. But then what they were kind of showing was like when mortgage rates rise by more than 1%, so that's the increase is in this column here, like in between October 1993 and December 1994, in 14 months, home prices or interest rates increased by 2.38%, home prices still went up by 3%.
Yes.
Right.
Yeah.
So I think that a lot of people think that like with interest rates increasing, prices will go down. And like in 93, 96, 1998 through 2000, 2003 to 4, 05 to 06, and 2012 to 13, like they actually went up. And home sales then went down. So even though home prices went up, home sales went down. So it's interesting.
Yeah, I think it kind of, obviously prices some people out of the market. Grant, if you're trying to purchase a home using a grant loan, 2 of the grant products are back today, but for the most part, for the better part of 2 or 3 weeks, we've not really had any grant programs. So go ahead.
No, I was just gonna say I saw that online, but then I saw that like T-Shack now has money again, which I don't know.
So it's not that they've run out of money. I think that's a good topic to talk about. It's not that they've actually run out of money. It's that market volatility is changing so much every single day that there's no way for them to keep up with the moving of the rates based on kind of how they price things. So basically, they have a little disclaimer on their website, and it literally says, "Please note, due to continued marketing volatility, pricing for some down payment assistance options has been unavailable in the market." So just keep that in mind.
Are you straight reading that, or is that something that you already had memorized in your head?
I read that.
I'll allow it. Matt saying he said he saw a spot on CNBC saying that rates are at 5.25% for a 30-year. Is that what you're saying?
That is correct. Yep. Yes.
For 15, what is it slightly lower, or what are you seeing?
I honestly, no one's asked me to price on a 15-year in a while, just because the way the rates are going. So I honestly can't tell you what a 15-year looks like right now. Like it's true,
actual data and numbers.
Yeah.
But it's normally slightly lower of an interest rate.
Yes. Typically, yes. Yeah.
So maybe like 5.125 or something.
Yeah.
No, I mean that's crazy. One of the things I was looking at over here on the Keeping Current Matters slides and data is that as of the end of the month, and this is nationwide, but as of the end of the month, we saw an increase in active listings for the first time in 6 months. Again, this is nationwide. One thing we track, and I post on Instagram every Monday, like market stats. The total amount of listings in Houston went back over the 13,000 threshold for the first time in like months here in Houston. So obviously that's a lot smaller than looking at it nationwide, but for Houston specifically.
And it's also in different pockets. Yeah, I mean different pockets are being shopped at differently, I suppose, and are more, what would the term be? They're hotter than some markets, right?
Yeah.
So yeah, it's just very interesting to see how it's all kind of coming to fruition.
Yeah, for sure. Are you seeing a lot of clients purchasing new construction right now?
I actually am. I would probably say about 30% of our clients are purchasing new construction. A lot of the times it's for customization, right? They're able to go in, they don't have a ton of liquid cash, but they're able to go in and pick some, right, of their features, right? Maybe it's the countertops color, or the countertops, or maybe the cabinet color, or things like that. So they're able to pick that. So in some cases, yes, sometimes it's the incentives, right? They know that down payment assistance has gone away, and so the builder's offering sometimes $10,000 in seller closing costs, and so that kind of offsets what they need. So I think it's based on need and want, right?
I would say, yeah, I mean, I would agree. I would say though that I feel like the amount of incentives that new construction builders are providing are pretty slim at this point. At least
they really are. Yeah, and so what we're also telling all of our people is because Movement does old school Katie, because Movement does a long-term rate lock, we have the ability to lock people in for up to 360 days. And so that gives people more kind of flexibility, if you will, which is kind of nice. So we have the opportunity to lock people in a lot longer than most builders do, so sometimes that outweighs the incentives in a rising rate environment. Having some technical difficulties over here, guys. Don't mind us.
Don't mind me. My camera died, so now I've got my backup camera, which is like doesn't need as much light and all the things. So it's just the quality is just so not as good.
Night and day over
Not
there.
as good. I'm gonna work on this. What are your thoughts on this? If you want to check that out.
Yeah, definitely. So, Matt, so we know that the Feds are meeting in May 3rd through the 4th. I actually looked up the dates because I was wondering. So we know that they're going to be increasing 50 basis points in May, which will obviously be a rate hike. And then we know that they are supposed to be meeting in September as well. I think it's September 20th through the 21st. They're supposed to be meeting then, and it's supposed to be doing another 50 basis point rate hike. I think the Feds are trying to rapidly, not to get in too deep and dig myself into a long hole of conversation, but I think the Feds are basically just trying to dig themselves out of a hole that they've put themselves in by not increasing interest rates in 2020 and 2021 and trying to get the interest rate higher than what inflation is. To try to offset kind of where we're at so we can afford things again, right? So going to the grocery store doesn't cost me $300 every single week. So
that's just because you eat bougie food, but kidding. Not kidding. So I was actually, before we hopped on here earlier today, I was reading this article from, I think, Yahoo Finance, just talking about basically interest rates need to help to
stabilize basically
the economy.
Our economy.
Yeah.
Which I think, should have started in 2020, but I understand what they were trying to do basically because we were in, if you follow economics, you know that at the end of 2019, we actually started a recession. The only reason that we are not deep into a recession at this point, or coming out of one, I guess would be the point, is because of COVID. So
I love the Fed aims for 2% inflation.
Love that. I would.
And we're sitting at like 8%.
8.5, right? Is that what you just said?
Yeah, probably. So yeah, it's definitely interesting to see, how financial decisions don't always have an immediate impact, right?
Mm-hmm.
And these things are now impacting us that were occurring in 2020 and 2021 now are impacting the economy pretty significantly.
Definitely.
So the reason I was kind of asking about new construction was basically like we haven't been building enough homes over the past, decade. So, we're starting to see more starts. So like, yeah. And Matt says that will take a lot of hikes to achieve. Yeah, for sure. Let's see. So this was basically the housing units completed from 1970 to, mid 2000s. We had a decent, normal-ish number of units completed. Then we had a ton around the 2005 mark, right? When housing was booming. And then post, 2008, 6, 7, 8 timeframe, we were 14 years below the 50-year average. So we weren't building enough homes over that time.
Yeah. So it's kind of been, I had this conversation actually with a client yesterday, actually. He asked me basically just like, what are you seeing? What do you look at? He works for a bank. So we were just chatting and he basically was just like, would you agree that millennials buying homes finally later in life than what their parents bought homes at, and baby boomers are retiring all at the same time has kind of pushed us into kind of where we're at? And I was like, I would 100% agree. People that are in our generation are having kids later on in life. We're getting married later on in life. We're doing things later on in life because we're realizing that, we can do life. And then baby boomers, they're retiring, they're moving down, they're buying their, forever home.
Yeah.
So it's just been interesting. We definitely are running out of space over here in H-Town.
Just keep building out. Home ownership as far as a hedge against inflation. Basically, the blue is inflation rates and the green is home price appreciation. So we've been seeing, although we've been seeing a lot of inflation over the past, couple of years, past couple months, actually. I guess years, because 2021, we're now in
2022.
2022. That's the year we're in. Do you ever feel like when you're talking about years that you don't realize we're in 2022?
Almost every day I forget that we're in 2022.
Yeah. Okay. So it's not just me. But home price appreciation was at 18% last year nationwide. Inflation was at 6.8%. So although inflation is never a good thing, we're seeing significant home price appreciation.
Yeah, definitely. I mean, there is literally I think I say this to everybody, like there's no time like the present to buy a home. That really is true and rings true, because even if you gain only 6% appreciation, which is the standard and norm, you're still gaining 6% more than what you would have had on $100,000 at $6,000. So you're getting basically $6,000 for every $100,000 home you own every single year at a worst case scenario.
Yeah, for sure. What are some other conversations that you're having with clients right now?
I've actually been talking. What was that?
I said like concerns or thoughts that people have.
Just a lot of people are just concerned about interest rates and kind of where they're going, that we're pre-approving now, that are looking to shop in the summertime, right? So just wondering where rates are going to go. I'm also telling people, just as I was in 2020 and 2021, cash is king. Cash will always be king. Obviously, cash is king invested wisely, but putting all of your money into one basket or all of your eggs into a basket still doesn't make any sense. I went through that conversation with some friends tonight. 5 to 10% typically is like a $200 a month savings, but 5% of your debt purchase price is a lot of cash. So I was like, is it better for you to hang on to 5% and have that money for a rainy day, or is it better for you to save $200 a month? And they opted for the 5% down. So
just let's unpack that. Let's unpack that again. So if I'm putting down 5% extra down payment, I'm seeing what savings on a monthly basis?
$200 a month monthly savings, because your taxes and insurance aren't going to change.
Yeah.
So typically your mortgage insurance is going to go down just a little bit, and then your principal and interest will drop about $180 to $190. So it's not a huge savings for 5% more.
Yeah.
So, and that was on a $325,000 house, which is the norm. So
slightly under our average home price in Houston right now, but yeah. No, but I mean, that's generally like first time home buyer price point, so you could put down 20%, or you could put down 10%, you could put down 5%. I think there is something to say though about a couple of things with that, just to not necessarily like combat what you're saying. I completely agree. I'm a proponent of, not taking all of your money and putting it into your house as equity. We were planning on doing that when we bought the house we're living in now, and we were like, why are we going to put down 20 if we could put down 5 and keep that 15%, especially when we were buying in 2020, right? In case of whatever. I would say right now, as a buyer, putting down a higher down payment can make your offer sometimes look stronger than putting down a little bit less of a down payment. So that's something to consider depending on your situation and depending on what you're doing. The other thing I think that is important if you're putting down a low down payment is a lot of times right now, buyers are covering some appraisal gap, right? So if you're under contract at 325, but you think it's only going to appraise at 300, saving some of that money to be able to cover some of that appraisal gap could put you in a better position, right? So instead of putting that money down as a down payment, you're still going to pay it towards the house, but it would be that difference between where the property is appraising and where it's selling at. Correct. I hope that makes sense to people.
Yeah, I would agree. And then just to kind of also unpack that a little bit more, just get a little crazy over here. So the first thing that you mentioned was a bigger down payment. One thing to also keep in mind is that just because that's what you write on the contract, you have the opportunity to put less money down once you're under contract. The third-party financing addendum protects you if you don't qualify at the down payment that you're at. So we would have to verify that you have the access to that fund, those funds. But we can show that you're putting 20% down. And if you decide to put 15% down, as long as you qualify for the 20% down, the 15% down is okay. So just know that there are definitely options. Just because we show that doesn't mean that once you're under contract, you don't have the option to put less down, to put more down, and you can kind of unpack that from there. And then the second thing is that just because you're putting 10% down and your appraisal comes in short doesn't mean that you always have to make up the difference. That's why getting with a good lender is important, because then we could talk about what does upfront mortgage insurance look like? What does added, just not putting the extra money down and having a little bit of a higher payment look like? So those are conversations that we're having a lot recently.
Yeah. But I think it's something that like a lot of times, when we're having conversations with listing agents, when we're representing the buyer, if there is a, hey, can the buyer make up some difference, right?
Yes, definitely.
That's something that is a conversation that's being had a lot as well. So I definitely think that, that's important. I think a question that we're getting a lot along the same lines is like, people want to know like, okay, well, like, how am I going to know what to offer? Right. Or if it is going to appraise. Right. So for buyers that are doing their research and watching lots of, information online and listening to stuff like this, like, they're like, well, what's going to happen when we go to put an offer in? Like, we are going to go and look and see like what homes have sold for in the past 6 months. We're going to look at all of the pending properties as well and see where they're listed at. And if we can get those sales prices of where they're under contract at, that's helpful. One thing that we've been doing too is reaching out to the agents that have recently closed, as well as the ones under contract, to see if they're willing or able to provide us with information on where those properties are appraised at. Yeah. Right. Because like if they're selling at 350, but they appraised at 360, that's good for us. Right.
Yes.
If they're selling at 350, but they appraised at 300, that's not good for us. So
no, it's not.
Getting as much information as we can. And I think that's something that like leveraging, our industry relationships and the people that we know and the agents we know is like now more than ever, important. Very, very important. Yeah.
Yeah, definitely. I've got an agent right now that she, listings in Houston. She noticed that there was a home pending in the neighborhood and reached out to the listing agent and said, hey, when is this selling? This is a direct comp. And the agent was like, because she had a great relationship and had a good name in the community, the realtor was like, yeah, this is selling next week. And so then I know, hey, we need to hold off on ordering this appraisal until this home sells. So yeah, it's all about being strategic with your offers and getting connected with good agents like Katie and her team, just to make sure that you're utilizing people who are going to go to bat for you in situations like that.
And not to just like take you giving me a compliment and then give you a compliment. I think that is also a reason to use a local lender, because like the timing of appraisals and things like that and having those conversations is super important. Alternatively, for a lot of like banks or big, companies or people that don't have their hand on the process, it just, the appraisal gets ordered, it goes, it happens, whatever. And like, what we've seen over the past 2 years is it's really like, it's a group effort, right? Like it's the lender, it's the listing agent, it's the buyer's agent. We're all like putting our heads together, making sure that we're communicating all of the information to the appraiser as far as what's happening in the neighborhood, things that are happening off market, things that, whatever. We've even told appraisers like, hey, I know you just got the order. Let's wait. Can you wait until next week to go out to the property? And they're like, depending on the appraiser, they're like, okay, yeah, like I can fit it into my schedule on Tuesday. Does that work? Yes. So those are the things that are kind of going on the back end of that people are like, oh, like I can just, go find a house I want and have an attorney write up the contract. Yeah, you can, but like, good luck.
Mysterious good luck.
No, I had a video on TikTok that I basically was talking about buyer representation and I got torn apart on. So I haven't responded to any comments, but people are like fighting in the comments. It's hilarious.
I must go check this out ASAP.
Yeah, please do. So yeah, I mean, that's kind of it. I just want to drop a couple Houston things before we go today. One of them.
Can we talk about it? Can we talk about it? Can we talk about this?
Talk about what?
Can we talk about opening day?
Go ahead.
Okay, opening day is Monday. It's gonna be should be honestly a citywide holiday. I should not have to come to work. I'm gonna talk to my boss, aka myself.
You are the boss. When you write a letter to the boss, do you write it to yourself and then tell yourself,
dear self? Yeah, all the time.
Dear self, go to work. Yeah. Shut up.
So opening day is this weekend for the Astros, or actually Monday. Street Fest, Fan Fest is this weekend. If you are a local Houstonian and you've never been to Street Fest, I would highly recommend it. It is an amazing festival put on by the Astros organization. Lots of concerts, lots of carnival things, lots of fun.
I assume it's in East Downtown.
Is
it East Downtown or Discovery Green, or where is it?
It's like in front of Minute Maid.
So like East Downtown, Minute
Eat 'em.
Maid. Be
Yep.
there, be square.
That's right. And then before the game on Monday, you should probably, I'm just really struggling. I'm gonna stop.
You're good. You're there. You're there.
So before the game on Monday, you should check out Irma's if you've never been. It is a glorious place with fluffy, delicious rice and wonderful food. So can't eat there, but sounds good.
Irma's. I went there with Kelly Rogers.
It's delicious.
Yeah. All right. 2 things on Houston. One of them was this that I want to share. I'm actually going to share this, and I'm going to link this up in the description of this video on YouTube. Houston's major construction projects when they'll stop causing traffic problems. It's a Houston Chronicle article. They're talking about, obviously traffic's not just caused by construction, other things. Get this, I-45 towards Galveston is going to be under construction until 2025.
Again, I said never, and I really genuinely...
Like, they're not even trying to pretend like they're trying to help us out here.
December 11th. So it's going to be 2027. Should we put an over or under on that?
Well, and so, I mean, it's taking us all the way down to the causeway, right, to Galveston. But I just, yeah. So there's that. Look at this nice view of downtown. It's great. This is George R. Brown.
Right past that is Minute Maid.
Go a little further, you've got Minute Maid and Irma's, which is great. But Braves Project Alameda is spring 2022, so that's like fine. Shepherd Drive they're reconstructing, which is gonna suck. Late spring 2023. They're creating more drainage. And this looks the same to me. So I don't really know what's happening there.
The little, what is it? The color in the square that looks a little different.
Oh, this is new. This is new.
That's new. But
this is like Trader Joe's here, y'all. And the little British phone, as you say, phone booths. 59 and 610, May 2024. And they even acknowledge that they are the most congested roadway in Texas. To hopefully make it safer. Like, okay, great. It'll be safer because I don't already feel like I'm going to lose my life whenever I drive there. And then 610 near NRG. Estimated completion date not yet available. So,
I appreciate their honesty.
But if you want to go to a game or the rodeo, like just take the metro.
Yeah. For sure.
So yeah, that was that. And then the other thing that I thought was cool is there's this new themed sandwich shop that I am not sharing the tab. And they're going to have cocktails and munchies, and it's a stoner themed sandwich shop that's called Chiba Hut.
It's opening right by Shelby's work.
In Sawyer Yards, yep.
Yes.
Debuting on Monday, April 18th, which if you didn't already know, that is Astros opening day.
So on lunch, you can grab a Chiba Hut sandwich, and then you can get ready to have Irma's for dinner. Wow.
And but the sandwiches are all like stoner food. Like chicken, ranch dressing, mushrooms, bacon, and provolone, turkey breast, chipotle mayo, so.
Sounds good to me.
Munchies include pretzel nuggets, meatballs, and nachos. You can get a Rice Krispie treat with peanut butter, cocoa, and honey. So that is opening up soon. It looks like it should be pretty cool. I really like that area.
I love
Sawyer
that
Yards area.
Yes. The brewery is really cool. They have tacos there. Tuesday through Saturday, so it's a great time.
Yeah. What brewery?
Is it Holler that's over there?
Yeah, probably.
Yeah,
probably. All right.
They're really good root beer.
Better than St. Arnold?
Actually, yes.
Damn, that's a bold statement.
We should have a brew. We should have a brew. We should have a root beer tasting test.
I will do that after 75 hard. I'm not drinking soda right now.
I'm down to do that in May, at the end of May. Are you available?
I will not be available in May. Okay, I'm doing 75 hard through basically mid-June.
Okay, so the end of June. We'll connect at the end of June.
Well,
so
I won't be home. I'll be in Greece, but we can do it in July.
July, we got y'all.
July 2027 when the highway's finished.
We'll celebrate with the
we'll celebrate celebratory root beer float day. Except I can't do a root beer float. Anyways, any last words, Paige? Words of wisdom?
No words of wisdom.
No wisdom for me today.
No wisdom. Follow me on H. John Mortgage Chick. I put out I think, educational stuff every once in a while. Trying to drop some better content, trying to keep the people informed. Yeah. I hope to see some people there on the 21st, right? 21st, 22nd, 23rd. When are we seeing people?
22nd, 23rd. I'm
22nd,
an event here in
23rd.
Houston for real estate agents. But anyways, all right. Very much appreciated. Thank you for your time today. I will see you soon.
Yep. Have a good night.